Moody's says the European Union summit didn't deliver, warns of ratings reviews for all European countries. Chinese exports fall to the lowest level in 2 years as a bubbling recession in Europe smacks demand. And a stronger U.S. dollar is beating up commodities and stock futures. I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Alex Steele with The Street, and together we bring you Morning Call Express. Scott, stocks have had a really rough go of it. Big sell-off Thursday. The S&P closed up over 1.5% on Friday. Now the futures are open and down. Are you going to buy this dip? Are you long right now?
I did get long again on Friday, and last week traders got fully chopped up. The intraday action or the day-to-day action has been very tough because there's been no continuation of moves. After all is said and done, though, we're in the same spot we were, and the market looks poised to break out, but how we get here, it's just hard to handle. And I did get long on Friday. I'm going to try and buy this down open, but there's going to be some important levels to watch.
Let's look at those levels to see where you're going to be going long and getting that exposure versus, say, getting short.
Yes, well, what I'd like to do is I'll show you the chart. I'd like to see 1238 to 1242 hold. So if you look here, you will see that's this level. Okay, you had that really nice move the week after Thanksgiving. We've been holding in there. This was that Thursday. That was definitely brutal. Then we had Friday on the hopes that Friday was enough, and now we're getting some sobering headlines. So the question is, if we can continue to hold 1238-ish, I think that the bulls will say it's constructive, and then if we could finally get above this 1262 to 1267, we could get that Santa Claus move that traders are trying to position for into that 1290, 1300, come end of the year.
Now, of course, a lot of that is based on European headlines. We also have a very heavy week with economic data on the slate in the U.S. What's the level you'd be looking to reverse those longs and get short here?
I probably would just lighten up. I wouldn't get short so quick because anyone who keeps flipping around, they're really pulling their hair out. I'm trying to be net long. I don't want to put my year in jeopardy the same way a lot of traders don't. But then again, we don't want to miss that last move that could add to our bottom line into the bonus package for some of the people who get paid by bonuses.
And where will that last move come from? So, Scott, what are the 2 out of the 5 stocks we're going to talk on the entire morning call that are showing relative strength, showing momentum that could benefit from kind of a rush into stocks in the next couple weeks?
I've been watching Google, been talking about Google. I think that they're in position for 2012. Santa Claus comes. I think Google could break above 630, and then next year at some point see above 700. Quick look at the chart here. On the daily, you'll see nice upper flag. Looks like if it breaks above 630, it's on its way. And if you look at the weekly chart, it really, really looks good because, once it gets above this big time resistance, it could be, off to the races to the 700 area.
And then what other stock is on your radar also?
I think ISRG, different group, different sector.
Intuitive Surgical?
Yes, looking good. I think if we can get above, 440, I'm not even going to show you the chart, I think it can get some momentum into year end.
And I want to round it out here with gold, really getting hammered today on a stronger dollar. We're hitting that 1680 level for spot. Have we broken here? Has the chart broken?
If we can get, just say, a 30 to 60 minute close below this level, I think that we can cascade lower. It's been building a wedge type pattern. It's been holding here after the move off the highs. If you take a quick look at the GLD, you will see this wedge type pattern. This is actually the long-term chart, so it's pretty important. Here's that wedge that I was just talking about, and here's that longer-term trend line, which we're not looking at yet. So if you look closer here on the daily, we are now below this 165 in the chart. So below 165, you could see a quick move to this 162, and then at some point, if it doesn't get back above this broken trend line, you could see those September lows, which brings us to about 155 in the spiders. That GLD.
Now, do you think that this is anything more than just say profit taking headed into the end of the year? Gold is still up 18% compared to the S&P, which is relatively flat. Or do you think traders are really using it as a sort of proxy for Europe, kind of trading with the euro? What's your experience?
I think the experience is for the last month, everyone is just really frustrated. They thought it could be a safety vehicle. They thought it was a vehicle that if the sovereign nations get in more trouble, it could be a currency. Then when calamity hits, it gets sold anyway. So all in all, the price action is saying right now lower. If you try and make out what's going on behind the scenes, I don't actually know yet. Maybe we'll get clues of that first thing next year.
All right, good stuff. So we're going to talk about healthcare, other relative strength stocks that you definitely want to key into in the last couple weeks, and more about gold on the entire morning call on The Street. So check it out.